Hey everybody, today I am very pleased to have with me Mr. Brian Wagers of Elevate today. Brian, welcome to the show. Please introduce yourself to our guests,
Yeah,
to our listeners.
yeah, absolutely. Thanks for having me on. I'm a CIO at Elevate Commercial Investment Group. So my main focus here is on our equity, raising equity from our investors, partners, and institutional equity. We have about 5,000 doors currently. Before partnering up with Elevate, I was doing multifamily on my own. I had about 70 doors by myself with no investors, no partners, and then partnered with some family on 500 units before actually becoming a partner at Elevate, where now we're focused on um, value add, A class, multifamily across the country. So it's a little bit about myself and where I'm at currently.
So it's pretty rare that I have on the show somebody who has, started out as a syndicator on their own and then gone to work for somebody else. Um, so I, usually what if people are in partnerships, it's because they did a couple deals with somebody and then they kind of partnered up. But you would never they don't characterize themselves as like working for someone else or even working for a business. It's like, hey, I've got a partnership. So I'm really curious what was behind you, moving over like in-house, quote unquote, with another firm. And so how do you feel about that? How do you feel about the adjustment from being the boss to being, part of a larger team?
Yeah, for sure. It's definitely not the normal path. And I'm a partner there, so I do have say on what we do. I don't know that like George or Eric, my other two partners, even though they have more ownership of the company, that I don't feel like they're my boss. And maybe that's why I ended up partnering with them, because it was very collaborative effort when I was just a co-GP of Wagers Capital at the time. And I think the relationship really grew. And I saw a lot of value partnering up with a team that was larger than me and more area. I'm in Northwest Arkansas, and I was just doing small, medium-sized deals here. And there's only so much inventory here in Northwest Arkansas. So that was one of the needs. Was I could either stay in my market and do other commercial real estate, or stay in multifamily and look at other markets. And I knew I had to partner with someone that was, vertically integrated and doing what I was doing on a larger scale. So that's when I reached out to them, and I started focusing on the capital raising side of the business versus just what I was doing before, which was everything like managing property managers, setting up legal, setting up insurance, setting up lending, managing construction, and raising the equity. But that was from friends and family at the time. So I really liked the equity raising portion. It allowed me to really focus on that side of the business versus everything else.
Yeah, when did you reach the point where you decided like, hey, the only way I'm going to get to where I want to go is to stop doing it all myself?
I think like so what I was doing was a lot of joint venturing, and larger syndication was always in the back of my mind. Everything that I had read and went to every seminar, that was always, the principle, and that was always, at the end goal. But for me, the point was I was starting to make offers on some of the same apartment complexes that I had already seen. I've seen some of the same properties that were getting sent to me. I had already made offers on them, and it kind of was like, I'm starting to realize that, there's only so many doors in Northwest Arkansas and my area. And that's where had my systems in place to buy those, over 500 units, as a sole partner. So I think that was pretty much the aha moment when it's like, okay, some of these apartments are recirculating that I've made offers on throughout the years.
Why did you reach out to Elevate in particular?
So I was in Northwest Arkansas, and I understood the Dallas, Texas. I understood that market. I liked the Texas story. And then I saw George, what he was doing operationally. I really liked the in-house construction side of things. For me, walking a 12 unit was, I can walk a 12 unit and see problems there, but walking a 300 unit apartment complex, I did not feel very comfortable doing that, and missing, potentially $1 million problem. So I wanted someone with, construction background. That was really big for me, if especially with me focusing on the equity raising. So the Texas presence and then the operational experience. And then we actually were talking online, and then we met at a conference in Dallas about 2 years ago. And the conversation went really well. And we decided to, co-GP on a couple deals, and those went really well. The communication was good. I went above and beyond what I said I was going to do. That they were very transparent with me throughout the steps, what everything was going on, and saw some value there.
And what is it about the capital raising aspect of things that attracted you?
Well, I like talking to investors more than property managers. That's one aspect of it. Talking to people about diversifying in multifamily real estate. A lot of them didn't really know that's a thing out of the stock market. Finding out how they grew their wealth was really interesting to me. I've always been focused on that. And then the other aspect, I can raise capital here in my desk in Arkansas for a deal in Florida or South Dakota or Oklahoma. I can do that virtually anywhere. So I really like that freedom of not having to be boots on the ground for an asset, and being able to stay here in Northwest Arkansas and raise on that. So one, I like that aspect of all the wheels of the multifamily train the most. And then, I like the freedom of being able to do that virtually anywhere.
And how do you raise money? I mean, this is kind of a broad question. I guess the question should be better stated is how do you find investors? I mean, you've kind of alluded to the fact that you started out with friends and family. Obviously, you've moved beyond that. You're with a bigger group, and you can't rely on those sources. So, what are the things that you do now, to bring new investors into Elevate?
Yeah. So like you mentioned, it started with friends and family, started with neighbors I had invest with me. I had commercial broker invest with me, a property manager invest with me. A lot of it was local networking. One thing I did that I wish I would have done earlier was start being vocal about it, start telling everyone that I was investing in real estate, start posting about it on Facebook and LinkedIn. Before, when I first got started, I was hyper focused on just doing deals, which served me well. I was able to build systems and get some deals done, but I could have simultaneously been building up more investors. But so for me, it was evolving from the friends and family to people more just in my network that, maybe I know, but not personally. So social media was big, getting on podcasts like yours, and then continuing with the in-person networking, going to business events where not necessarily real estate focused events, but more business events. I have had success in real estate events, going to the single family meetup, and you're the apartment guy at the single family meetup where, some of the single family people are interested in going to apartments. I started a commercial real estate meetup here in Northwest Arkansas as well. So there was no commercial real estate. So I ended up starting that meetup, going to, events where the local bank hosts open houses, go to those, any kind of events where there might be high net worth, and then continuing the push on social media. So for me, it wasn't just social media or just in-person events. It was kind of hitting it from all angles is what I continue to do. Going to conferences, still looking for partners that have investors that, want to get involved on the co-GP side as well.
So you're networking with other people now who can also raise capital for you. Or you sort of is that like one way that your role has evolved, and that you're not simply raising capital, but you're kind of like herding all of the capital raisers that might be coming into a deal with you?
Yeah. So we have, co-GPs that can raise capital, and that's part of the aspect of growth. I think, we could try to raise it all internally, but then at some point you run out of your own capital and your own investor base. So that is part of the role, is managing co-GP relationships, managing our own investors. We just hired an investor relations about 2 weeks ago, full time, where I was doing that pretty much by myself. So managing that, and then some of our institutional equity. So sometimes we'll use pref equity if the deal allows it, if it fits for the deal. Sourcing some of those larger check writers as well. So pretty
So
much anything where the equity comes from is my wheelhouse.
now that you have sort of offloaded the investor relations piece to somebody else, what does that allow you to focus on?
More high level conversations, instead of, network, like having the $50,000 to $100,000 conversations where someone might invest 100,000 or 50,000 and they're maxed out for a year, that's can be done by the investor relations. He can have more touch points, and then any sort of more high level, larger check writers, I'm able to source those more, dive more into the family office conversations, look at more strategic partnerships with co-GPs, have more time for that.
And how are you building the relationships with those people? Say like your institutional family office investors, your co-GPs. Where are you coming into contact with those people?
I think it really starts with like sending, like the relationship starts with just sending them an actual deal to look at. It's hard to like start that relationship before you get a live deal. So I think that's one of the best exercises, potential partnerships or potential relationships with. It's so you can show them how you're looking at a deal. They can see how you look at the deal. You're doing the song and dance. And you can, a lot of times it's not going to be a good fit for the first deal, but then you actually find out what aspects of the deal maybe they look on yield on cost, where I didn't know that's a thing, or people have certain cash on cash metrics, or some people are more focused on equity multiple, or finding out what markets actually people will look at. So a lot of times it takes a deal or a couple of deals to really get an idea of their preferences and what kind of splits they like, what kind of markets, what kind of asset classes they look at. And I guess source, as far as finding those partnerships, conferences are really good. Networking on LinkedIn, I think, has been really good. So that both of those, LinkedIn and conferences, not really finding them on, and even though I personally use Instagram, not a lot are on that social media. Facebook and Instagram more like friends and family and network, some of those smaller check writers.
So talk to me a little bit about LinkedIn. What are you doing on LinkedIn to identify investors?
Yeah, so I'm posting consistently. I think LinkedIn algorithm is still growth oriented, where Instagram and Facebook they're always changing the algorithm. I think Instagram is trying to open it up for more organic reach. For me, just always posting and then trying to, similar to what, the in-person networking, you're looking at groups that may not be specifically real estate focused, but are high net worth, that probably their time is better spent growing their climbing the corporate ladder or growing their business. So you're looking at business associations, you're looking at high level, maybe lawyers, dentists, doctors, those types of groups, locally too. So where their dollar per hour is better spent, growing their business than it is going chasing down a deal, and maybe they even get one, or and then beating those returns that they would expect. A lot of them know that real estate is a good investment, but not necessarily know how to passively.
I mean, this is something that I always talk about with students, because they come to me and they say like, well, how do I raise capital? Where do I find investors? And usually their thought process when they're starting out starts and ends with like real estate investor meetings, right? They think, well, that's where the real estate investors are. And then they get there and they find that there's, 50 house flippers and they're all looking for money. And everyone's looking for the same thing. So I always tell them, like, identify these groups of high net worth people that don't have anything to do with real estate and be the only real estate person in the room. So it seems like you've been following that kind of strategy for meeting new investors.
100%. Yeah. I same thing with me. The first thing you think is your local RIA meetup, and then it ends up being the fix and flippers, so the contractors that are there. Maybe you find someone that wants to diversify into multifamily, but that should not be your focus. And that's also why I started my local commercial, like Northwest Arkansas commercial meetup, versus there was a very big single family, or it was a it wasn't even labeled a it was just labeled the real estate meetup, but it was very single family focused. So I started a commercial meetup. So that kind of helped draw more attention to my brand and awareness of that aspect. And yeah, again, to your point and what we've been talking about is, getting in the room with those high net worth individuals virtually and in person.
And how, so in terms of your meetup, how do you run that meetup? Like, do you have content in the meetup, or is it just, networking? What's your formula?
Yeah, so I started off with 15 to 30 minutes of networking, and then we'll have someone local speak, whether that was myself, or we'll maybe have a property management company speak, or we'll have some like a large bank representative there. Commercial brokers have spoke. We had a CPA speak at one, and then at the end we'll open it up more for networking. I think right now it's been a lot of speaking, but even just coming back from this event this past week, I think I'm going to open it up for more on the networking side. I think we could have a longer networking and shorten the educational speak, because I think a lot of people go there to network too. So that's just been something we've been pivoting and working with, but we'll start it off with a little networking and then end it with the educational piece.
And where do you do it?
We've done it all over the place. We actually did it at a public library. It's free there. They have a large room there, and they have presentation boards there. Now we did it at a beer garden one time. That was pretty good, but it was hard to see in there. Like, the presentation was kind of hard to see. We've looked at a co-working space. Local commercial area actually has like an event space that they're going to host us for this next meetup. So could do it there. So we've been playing around with that.
And do you have help doing this, or do you do this on your own?
Yeah. Yep. I have another local commercial real estate syndicator, I guess you could say. She does a little bit of like mobile homes and build to rent. So she has another aspect of the commercial real estate. She's where I'm hyper focused on multifamily. She has some aspect there, and she's super organized, and she helps get it together. And then Elevate has a virtual assistant that I use for branding too.
And how do you sort of capture the information of the people who were there? Because if you don't get their information, it's not useless to do the event, but I mean, that's really where the value is to you. So how do you make sure you get that?
We use Eventbrite. So Eventbrite, that's how we'll get RSVPs, and we'll have them sign up in the beginning. So that's, a lot of times people, you probably get close to 50% not actually sign up and not come. But you'll still get their email and contact information to follow up with. And then LinkedIn and Facebook has their own feature too now, where you can do events through Facebook and LinkedIn. So I've been using those independently, because I think they'll actually show that more. If you put a website on Facebook or LinkedIn, it doesn't get as many views, because you're deterring those people away from their site. So I actually use the LinkedIn and Facebook feature, where the Facebook event feature, and invite them through there. And then you're capturing their information there too. And then we can always do sign up sheets when people come too. We try to do that too, just to see who's actually coming.
How do you also access you said you go to meetings of non-real estate investors. Are you just showing up as an attendee at those, or are you speaking to those groups? And if so, how are you getting on their agenda?
Yeah, so recently it's just been attending. I just spoke at the Dealmaker Live this past week, Michael Blanc's event. That took me quite a while to be able to speak there. So usually I'm just attending and networking there.
But what about for like your local business groups and stuff? And we talked before about, getting in front, getting in front of the lawyers or the CPAs, or, the Chamber of Commerce, or whoever it is. Are you going to those meetings, or are you speaking at those meetings? Sort of
I'm
What's your
going,
strategy?
I'm going as an attendee and just making sure I'm getting in front of everybody. Not necessarily, usually it's like a big, they have their own agenda for what they're speaking on. So I haven't been a speaker, but that's a good idea. I mean, I haven't really looked at it that way, and that's probably something I could do is try to see if I could add some value to those groups. I spoke to a group of realtors, which some of the top producers can be pretty high income earning. So about investing in multifamily and trying to convince them to use their commissions to invest in multifamily, how it can be very complementary to realtors as they're super transactional on the realtor side, but they could invest those funds into something like multifamily. So I did reach out to one of the brokers that I knew had his own firm. So that was just a relationship that I had built. But that is something I probably do more of, is speaking to these, groups and asking to speak. But besides that, it's just been networking and making sure you have your elevator pitch. Pretty much what you're doing, you're helping people invest in multifamily real estate, and making your way through there and making good connections.
I mean, I do find like a lot of those groups, just in the same way that, when you're doing a meetup, you might struggle for like, okay, who's going to be my guest speaker this time? Like all those groups have the same issue, and they're always looking for people to speak at these events. So, real estate's a pretty popular topic. I find, and just about the brokers. I mean, I think if you're a broker out there, I think a lot of brokers they're not focused on the fact that they're real estate professionals, which actually means they get a big tax advantage from investing in real estate. And they think so much about transacting in real estate, but like you said, it's always like they're, sell a deal, get a commission, and then they're like running after the next deal. And they're, by investing, they can not only create passive cash flow for themselves over time, but they get this tax break that most people can't get because they're real estate professionals. And, most of them don't even know this. Like my brother's a broker, and I explained this to him, and he's like, really? I had no idea. So, it's worth talking to brokers about that too. I find they're always surprised.
Yeah, I think it's a big niche that could definitely use it. The top producers, and they're a lot of times they're not investing, and like you said, that real estate professional status is a game changer, as far on the tax incentives, and they can take advantage of that.
People are working so hard to get that status, and these, brokers just have it, right? Because that's all they're doing. So they have this, but they're not investing, so they can't take advantage of it. So brokers out there and agents, you got to be investing in real estate, not just doing transactions. It's huge for you. Look up real estate professional and see what that gets you from tax perspective.
100%.
So I want to shift gears a little bit here and just dig into the background a little bit. I mean, you mentioned to me, starting off that you built a portfolio of 70 doors on your own with no investors. I mean, a lot of people would, be like, okay, I've arrived, I'm done. I'm just going to manage this portfolio and sit there. I mean, I do want to hear about the rest of the story, obviously, but how did you do that? I mean, because there's a lot of people who want to do that.
Yeah.
How did you do that?
Yeah, so I was when I got out of college, I was in sales. I wanted to be a personal financial advisor. No one would hire me, so I went into commission sales, and I became a top producer in sales for about 3 years, and was pretty close to becoming a accredited investor and maxing out my Roth IRA account. And I decided I needed to do something besides just stash it there. And I thought, okay, all wealth is created in the US by the stock market or real estate. And I saw stocks as this quick and easy way to do it, and messed around with some stocks, watched GoPro go from $35 to $5, and decided that was not what I wanted. And I was just staring at it, watching it go down like I had some sort of control. So that led me to real estate. I went through the whole BiggerPockets, education, every podcast, every book I could. And I bought a single family property. I put $25,000 down. It was a $90,000 home. Mortgage was $450. Rent was $950. The guy paid me Venmo first of the month. Really nice guy. There was no horror stories. That was just my first way into real estate. I was like, okay, I've got the concept now. It wasn't, this guy's calling me all the time or he's not paying. It was just going to be way too slow. And everybody I had listened into commercial real estate And multifamily, the one thing they all said, I wish I would have got started earlier. What's that, like, they always ask, what's one thing you would do differently? And they all said, I wish I had got started earlier. That was the most common thread. So I knew wanted to get into commercial real estate quick, and I understood the principles of rental property investing and then the scalability of commercial real estate. So another thing I heard was, niche down and don't get the shiny penny syndrome. There's 1,000 different ways to make money in real estate, but try to, pick one avenue. And that was multifamily that I understood. So, started getting educated on multifamily, read every single book, went to seminars, and I located a 12 unit, was on MLS. A lot of these small multifamilies are getting a hold of by residential brokers, not really on commercial listings. And it was on the MLS for a little while, and then it fell off. I stayed in touch with the broker and found out, the previous buyer fell out, and I was ready there to swoop it up. I got that first 12 units. And then my girlfriend, now my wife, she used to drive me around crappy looking apartments, and I would take pictures of them and send them letters in the mail saying, hey, we're buying apartment complexes. I got one seller who had a 20 unit to seller finance the deal to me. And then I was able to refinance that 12 unit into another 12 units. So then I had the 20 units, and then I had 24 units. I had a commercial it was at the same time I was networking with commercial brokers. They saw, okay, I had a couple of small multis under my belt, and they were started to send me deals, pocket listings before they actually put them to market. Had a really bad looking 22 unit, and siding was falling off, holes in the driveway. And I told him the only way I could do it is if he seller financed that deal as well. I said, I really, I'll get pretty close to your price, but I would need you to seller finance. That's also because I didn't have any money and no investors would do that deal with me, and got him to do that on a 22 unit. So that was kind of how I built up that portfolio. And then
sorry, I'm sorry to interrupt you. How much seller financing did you get on that 22 unit?
The 20 unit and the 22 unit had 20% seller financing. And then I had local banks finance the rest.
Oh, so you actually essentially got all the equity from the seller. So
That's right.
You did 100% financing from your perspective, basically.
That's right. Not a lot of some local banks will do the seller financing. Not a lot of them will. So I was pretty much cold calling every local bank I knew that national banks wouldn't do it, but I just looked up every bank in my area that only had like 2 or 3 locations, and I just went down the list and called them and asked them if they would do that, and found a couple that would. And then, got those 2 deals, part of those 2 deals.
And so then where'd you go from there? So you're up to about your 70 units there. And so what was the thought process now? You're like, I just want to grow this. I want to keep on going.
Keep on going. I was building up a track record. I had commercial brokers see that I was, everything that I was putting on a contract, I was actually following through on. I was very good on communication with brokers if a deal worked with me or not. So I was building up pretty good momentum there. And my girlfriend's dad at the time, my now father-in-law, he saw what I was doing. He had 10 single families free. He's local commercial paint contracting, does deal for Walmart. He has a very successful business, but he also owns some real estate. He owned 10 single family free and clear. And I had to convince him, debt can be a good thing, leverage can be a good thing. I know you went through the 2008 crash when I was graduating high school, but it can be a good thing. And I showed him worst case scenario. And I had this track before I even felt comfortable. I had built up this kind of track record of what I was doing. So we started to buy deals together. We partnered up on a 54 unit. Him, a commercial broker, and a property manager all threw in equity on that. And then me and him bought an 82 unit. And then we bought a 49 unit, and then a 14 unit, then a 50 unit, then another 44 unit, then a 7 unit, then another 34 unit. And we were buying pretty much under the radar of the larger group stuff, anything, 90 units and below, we would buy. Probably the smallest I was really looking at was 8 units. So anywhere between the 8 and 82 unit. It wasn't like I'm going 8 to 12 to 50 to 80. It was 80, 50, 60, 30, going back and forth, just getting these small, medium-sized deals. And that's how we built up that portfolio of that additional 500 units, where he was the equity and I was everything else. I had a neighbor and get involved in one, like I mentioned, the property broker, our property manager and commercial broker, and another local investor as well ended up getting on there. So it was about, mostly him and then like 4 or 5 other local investors.
And how were you managing these? And especially since they were all different sizes and stuff, how did you do the management?
I had a local property management company, manage those. They had a local presence. I started with one. They were like on Excel spreadsheet, so I had to move on from them. But that was like for my first 12 unit. I didn't know any better. And then I found a local property management company that was growing, and they were based here, and they did multifamily nationally. Trinity Multifamily, if you're familiar with them, they're based in Fort Smith, which is 45 minutes south of me, and they were good with it. And when they first came on, I had a small portfolio, and I'm just piecing together these small, medium-sized apartments. So they kind of looked at it as a portfolio.
And so you built the 70 yourself, then the 500 you built with basically your father-in-law.
That's right.
And then what was the next step after that?
So that was right where I got to the point of, I had this syndication in the back of my mind. I knew I wanted to get in larger deals, but I really didn't know how I could do that just by myself, where it's going to be millions of dollars. And that's when I started to, some of these apartment complexes that I had already made offers on, they started to, unfold again. And it was like, I've made an offer on this deal, and actually someone else had bought it that I didn't, and they're trying to retrade it again. So it was kind of that aha moment that, there's a limited amount of doors in my market if I'm going to stay here, and really pushed me to go to the syndication model where I'm going to start, actually raising. And I think right at that same time, I had just started to kind of let people know if I was going to check in on property, I would turn the camera around or, record it. I had a couple hundred units before I even had a business card or a website. I put my girlfriend at the time, my now wife, into a program where they taught you how to build a website, build an ebook, or a lead magnet, start booking me on podcasts. So that was like it was simultaneously starting to get my name out there about what I was doing. And then that's when I reached out to Elevate. I was looking for other operators, and that's when I found that what they were doing in Dallas.
And so then how long? So then you hooked up with them, and then you raised money for them. Is that how you?
That's right. Yeah, my first raise was 126 unit in Irving, Texas. I raised $525,000 for that. I thought, I was going to raise 500, and then was able to get 525, and then the next deal I raised $1.2 million on it in Houston. Then went on to do a couple more deals where I was slowly building that up.
And then how many deals did you work with them on a co-GP basis before you joined up with them as a partner?
So it was the Irving, Houston, 4 deals.
4 deals.
Yeah.
So that kind of brings us full circle. So
yeah.
So I have a question I really want to ask you. So you said you tried to become a financial advisor and nobody would hire you. Have you gone back to those financial advisors who didn't hire you and say, look what I'm doing, and you guys should invest with me now? Have you
I need to. I'm friends with some of them on LinkedIn. It was Northwestern Mutual, not to say any names. They now have my life insurance policy and my newborn son's life insurance policy. So I guess I'm not holding too big of a grudge there. But yeah, I mean, I should definitely hit them up about it. And I'm glad it didn't happen. At the time you're young, who are you going to call? All your friends are still in college. And I was like, give me a phone book, I'll call whoever. But that didn't do the trick. So I guess I'm blessed that I didn't actually go that financial advisor route.
So, hearing your story, it sounds like, just on a kind of surface level conversation that you've just kind of like had one success after another. But I know that, what goes into making the sausage is a lot different. And it may look easy from the outside, but on the inside, it's not. So, what have you struggled with over the course of, your career? What have been some of the obstacles that you've had to fight to overcome to get where you are?
Yeah, I guess like in the beginning, it was like I guess what's known as the imposter syndrome, it's like not like having the experience and making sure that I was able to actually handle someone's investment and making sure that they felt comfortable with me and that I wasn't just somebody just asking for money. I also didn't want to just be begging for someone's money. And I think those were two of the early obstacles for me. And I'm glad I started to post about, if I didn't get over that, I would have never started like actually being vocal about what I was doing and getting people involved. And at the end of the day, you're not selling someone, you're actually helping them, investing in a good multifamily asset with, good underwriting expectations and a good market with a good team, you're doing them a service by offering them that, getting them out of the stock market, getting them out of their 401k. So I kind of switched my mindset to where I was helping people, not just selling them some service that they didn't need.
I mean, was that primarily how you conquered the imposter syndrome, or were there other things that you did?
I think, well, in the beginning too, was building up a track record of the small, medium-sized deals. Theoretically, I could have just went to Elevate right away and, use their track record and operational experience. But for me, I wanted to like actually understand it and actually do it myself. I think also it may have been a small-minded mindset too, where I thought like this was what I understood. I understood figuring out how I can get a couple $100,000 versus how does this work when I have $10 million to raise or $20 million to raise. We're working with other partners.
So we're pretty much up against our 40-minute limit, but anything else that you want to share with the audience that we haven't touched on? I mean, any pieces of advice or words of encouragement, or just anything you think it's important for them to know about you?
Yeah, I think just getting clear about your goals. I think, a book I read recently, Who Not How, is really relevant to my success. Is, you get a good goal, but you look at it on the perspective of who you're going to get there with, not how you can get there. So I think that's part of my mindset that's really helped, and being persistent has helped, obviously, not being afraid of hearing a no for the first time, or and just being persistent in that pursuit of your goal.
Yeah, Who Not How is a book I've heard a lot about recently. I definitely want to read it myself. It sounds really great. Well, can you tell me like a big lesson that you learned from that book before we sign off?
Yeah, I think it's just a mindset of like when you're looking at a goal and when you're looking to get somewhere, look at it like who you can get there with, and think of, it's okay, not what are the executional bullet points that you're going to take to get there. It's going to be, okay, what partners do I need to partner up with to get to that end goal?
Well, that's a great way to sign off. If people want to get in touch with you and, further the conversation, or, join your list over there at Elevate, what is the best way for them to be in touch with you?
Yeah, I'm on LinkedIn, Instagram, and Facebook, Brian Wagers, or you can email me, Brian, BRIAN, at elevatecig.com.
All right. Well, everybody, please take Brian up in his offer and connect with him on social media. Send him an email if you want to talk further. Brian, it's great meeting you today. Great having you on the show. Thank you for your time.
Yeah, appreciate it. It's great.